structure, right? With the rules of market structure, the only way we can know that a trade is going up is by an A, B, C, D move. Meaning what? Meaning we need to have a low that gives us AI, a low that fails to get broken, giving us a low which is C. Again, let me restart. I know someone got confused there. We need to have a low which we tame A, and then we need to have B, which is going to act as our high, and then we need C, which is going to be the new low, and then we need D, which comes and breaks the previously made high. Now, the break of previous highs is what makes us say we are in an uptrend, and the failure to break previous lows but continue to break previous highs is what makes us consider ourselves to be in an uptrend. Okay, we have someone who's raised an hand. And let's see. Um, Janet, Jean,
Good morning. Yeah, it's Jeanette. Good morning, sir.
morning. How are you?
Thank you. I'm good, and you? Oh, um, can you please highlight where you're marking the highs in the low so that at least it's clearer? With me, I'm not sure if it's my phone or what. Your markings are too faint where you're showing, and it's moving too quickly. So maybe if you can highlight yeah, thank you.
All right, it's fine. So generally, what you're saying is we've just opened our charts, and as SMC traders or as people who believe that there is always opportunities in the market, we need to know where our market structure is. So the first things first, we need to have a low, and that low needs to give us a high, and this is the high that I'm in over here, right? And that high needs to give us a low, right? Now, this low over here that I'm putting, sorry, this low over here that I've just marked, it can only be fully valid, or we can fully protect it if it manages to come and break this high, right? Now, the reason it has to break this high is for us to confirm to us that we are in an uptrend. Now, without using the terms highs and lows, you find out that this is our A, this is our B, over here, this is our C, and the newly made high that is going to be made as a result of breaking this high is going to be our D. Hence, we call it an A, B, C, D move. So this is the only way now we can fully confirm that we are in an uptrend. What do I mean by that? Let's go and look on the actual chart. And it's so fortunate we have an actual chart over here. So here we see that we have our A and we have our B, right? And we have our C and we have our D. Now, our A being a low, our our high being our B being a high, our C being a low, and our D being a newly made high. So now what you need to know is instead of saying this is A, B, C, D, now what you can say is this is now your A, and now this is your B. You're now expecting the existence of a C and the existence of a D move. So often many people now they confuse reading structure in what sense or in what way? In a way that, yes, someone can spot an A, B, C, D move, right? They can spot an A, B, C, D move and it. But then when they spot that A, B, C, D move, what are you going to see? You're going to see that, let's say this is our H4, and this being our H4, remember, if we switch to H1, you are going to have highs, lows, highs, lows, highs, lows, highs, lows, highs, lows. Now, the whole reason, the whole and the main reason why we start by using larger time frames to read our market structure is so that we know the overall direction of the market. You understand? We need to know the overall direction of the market. Now, when we know the overall direction of the market, how helpful is it to us that we know the overall direction of the market? We need to know the overall direction of the market. Sorry, today I'm talking like those Indian guys. We need to know the overall direction of the market so that we know how to align with our time frames. Say we've taken our entries in smaller time frames. So now that's where internal and external structure plays. Now that you've known that, you have highs, lows, right? Remember, say this is our H4. At the end of the day, you can't fully base on saying, um, I'm going to wait for this H4 to reach here. Let's say maybe we want to take our entry from this point, right? To reach here, most probably it's gonna take you something like 2 days, 3 days while waiting for a setup. Yes, with people we can do that. But you would also want to utilize opportunities that lie within the market. That's when you now switch on to your smaller time frames. And when you switch on to your smaller time frames, what you actually see is, sorry, I don't know what's happening with my, I don't know what's happening with my trading view here, but let me do this. What you see in smaller time frames is, instead of our time frame just being a straight line like that, what you're gonna see is you're gonna have structure, right? You're gonna have structure in those same time frames. But remember, what you have now is you have a major high here, right? Let me show you. You now have a major high here, and you now have a major low here. Meaning, whatever happens within this range of our major high and our major low, whatever is gonna happen is gonna be termed as internal structure, not external structure. Now, these major highs and major lows, they are now going to act as our external structure. Indeed. So, again, I'll repeat this in this way. We now want to advance a bit in our explanation. Right. So, what you'd find is, let me do this. What you'd find is, if you now zoom in, let's say, into your H4 and go to your M15, right? What you'd see is, sorry guys, I don't know what's happening with with these two over here, but let me try to fix it. Just a second. All right. What you do is, if you zoom in your M15, it's gonna be saying otherwise. It's gonna be selling, buying, selling, highs, lows, highs, lows, highs, lows. So if you jump right straight into M15 and then you don't consider your larger time frame, what you're basically going to see is you're going to think that this M15 is going to be selling for a long time. Meanwhile, your H4 is buying. Now you can enjoy this sale and you can get to a point whereby you get reluctant and think it's gonna go down forever. But just because you don't know that you're supposed to create a low and come and take out this high, you're actually going to let it swim in profit, then you hold it. It comes in loss and then it goes up. So now you have to understand that there's time when structure shifts in as much as we have that internal structure. And when structure shifts, that's when we talk about break of structure and change of character. But for now, let's just introduce the term break of structure. So what is break of structure? Break of structure is when we were uptrending, okay, now I think some of us have seen some videos from other mentors. If you break a high, if you break a high, if you break a high, they'll be calling this break of structure, break of structure, break of structure. Right. But for now, we want to term break of structure is our move that is going to change our market direction. Now we know that we were in a buy market, but then what you see is all of a sudden you come and you break a low, right? A break of your low is now what you term your break of structure. Why? Because when you are uptrending, you are expecting to see these lows above previous lows, right? But the moment a low comes and gets violated, we now call it a break of structure, and we are now saying the market is now switching direction from a bullish trend. Now it's supposed to give us, if we go again, we have an a B, and then once we get a C here and a D move, now we know that we are fully in a downtrend. So what you see is you have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Right. So whenever we violate my laws, that's when we are now considering that we've broken structure, is it? And what break of structure generally means is we are now changing market direction. So why am I talking about this? Why I'm talking about this is because, let me do this. Let me remove this over here, sorry. Why I'm talking about this is we want to be able to identify the trend, and we want to be able to know how the market is going to react within that trend. So we go again, high, low, high, low, high, low. And let's say this was in our H4. Right. Now, if we switch to our if we switch to our M15, instead of seeing just this straight line in our H4 and we zoom in our M15, what you're generally going to see is we're going to see highs, lows, highs, lows, highs, lows, 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 highs. And then we're going to see a break of structure. That now means we are now changing direction and continuing with the uptrend. And as we continue with the uptrend, what do we know? Our target is to come and to break these previous highs. And which high are we targeting? Like currently at the moment, we are targeting to come and break this high over here. And then we need to come and take out that high. We need to come and take out that high, right? So this is the whole reason why we need to consider our internal structure, but we need to keep note of our external structure as well. So just instead now when we zoom in, instead of having this straight line, if we zoom in, we are now able to notice this whole structure that is within that larger time frame move. And it and then there are points where, let's say the trend is now ending. We were buying nice, but the trend is now ending. What you basically see is, remember, Here we haven't had any break of structure. The only way we can consider that our market has broken structure is when it comes and takes out this low. Why does it need to come and take out that low? And why is that low important? This low is important because it is the one that came and let me mark here. It is the one that came and let me look for a two. There's a two that I'm looking for so that I show you with it. But well, if I can't see it, it's fine. Ah, dang, I think I can't see it. Whoa, it's okay. So what you know is this low is the one that came and broke this high. And the fact that this low broke this high makes this low valid, and we now call it a protected high, right? Now, we're expecting this low over here, this low, we're expecting it to come and break this high over here. But then there are instances whereby what we are terming to consider a low fails to come and break a high. Now, we call that a weak low. This low is weak because it failed. This low here is weak because it failed to come and break this high. Now, if we come and break this low, it's not a breakable structure. Why? Because price is the probability of coming and then go back up. Why? Because we are still within the range of the valid low and the valid high. Now, if price comes and breaks, come here and do this. Now, if price comes and fails, let me do this. If price comes and fails to break this high, but then it comes and break this low that failed to break that high, we now call it a change of character entity. And at the same time, whenever price or whenever a low fails to break a high, we now term that low a weak low. This low will be weak and this low will be a protected low. So when price comes and breaks that low, we now term it a change of character at this area, which means price might just come and break structure. So it's giving you a heads up of what might actually end up happening within the market and it. So now price has to come and break structure. So now we have two terms. We now have our change of character and our break of structure. And the best way we can put it in a drawing format is when we come, let me do this, is we can put a horizontal line over here. We can say there's a point in time when we come, we break a high, and then straight away come and break a valid low. This is a break-off structure. And there's a point when price comes, gives us a high, but then we fail to break that high, but we come and make a new, we come and we break what seemed like a low. This is a change of character. I'm hoping I understanding there. Are we understanding here?
Yes,
Yes,
yes, yes,
Yes,
Are we understanding? Are we understanding? Are we understanding?
yes.
Are we understanding? Are we having do we have people who think they're not understanding? Or do we have people who are left behind?
sikubata tena.
All right. So I think I have a question. You can ask Janet.
All right, thank you, sir. Is it okay if I can do a practical and send it through to you so that I do not ndandisisere kana kuti pachine basi?
Yeah, I'm going to give you a homework on that practical.
All right, that's fine, thanks.
All right. Anyone with questions? All right, so let's go and chart this on our actual charts and see what I'm talking about. Any pair, can you give me any pair? I don't want you to say that Nangandaga.
V75I.
So the compound is the oldest concentration synthetic
V75 one V75 1S.
Yes, yes.
All right, so this is our V75 1S. Right. And what we would like to see is we have what we call internal and external structure on this pair. So our external is, you can clearly see we have a high, you can clearly see we have a low, right? You can clearly see that this is, you can clearly see that this is a low, right? So our internal structure are structures that we can just easily see, okay, this is where our internal is and our external, sorry, up and mix some with, sorry about that. So let's switch to H or to M15 just for emphasis. No, let me start in H2 so that you all get to know or you all get to see what I'm talking about. So what we can generally see here is we have a high. Let's say this was our A move, this was our B, then this was our C, and this was our D move. So we have a high, a low, a high, a low that comes and breaks this high, and then a low that comes and breaks this high, and then a low that comes and breaks this high, and then a low. Now I'll explain what happened here. So remember this high over here, it failed to break this high. So what we are now considering our valid high and low is this low and this high. So let me mark it in a way kuti tinoona zvakanaka. Let me come and do this over here. So we have a high and a low. We have a high and a low. And we have a high. Watch if you're checking carefully, we are breaking previous highs. We've broken this high. We've no, let me not use this too. We've broken this high over here, and now we have broken this one over here. But which one is a valid low? This one is a valid low. When we broke this high, when we broke this high over here, we made a new low, and what's that new low is this new low over here, and then again we got another new high over here, meaning that we shouldn't come and break the previous low, which is here. But then what do we see? We see that price came and gave us a new low over here. When it gave us a new low, what do we see with price again? We see that price gave us a new high. Now when it gave us a new high, where is that new high that I'm talking about? It's here. And it broke the previous high, where it broke the previous high over here. And we got a new high. Now, this is now what we call internal structure as well. This is just a complex pullback. Why? Because the only valid low is this one and the valid high is this one. Unless we break this low or we break this high. If we break this low, we are now in a downtrend. If we break this high, we continue with the uptrend. So price came, gave us a low. That low failed to come and break that high. Remember what I told you, this low becomes weak, so we have to come and hunt it. So we come, we hunt it, and then we get a new low. That new low comes and breaks the previous high. And then we need to continue high, low, until we get to a point whereby we break previous lows. but this is in H2. As we are in H2, if you come and say we go to M15, what you are going to see is as much as we were overall in an uptrend in H2, M15 also has its own structure. See now, it has its own highs and lows, highs and lows, highs and lows, highs and lows. And then at some point as well, it comes and gives you those lows and highs, lows and highs, lows and highs, lows and highs going up. And how do we break structure? The way that we break structure is, I want you to see something over here. Say at this area, we had a high, a low, a high, a low, a high, a low, and then a high. Now, inside, we now know that this is our valid low and this is our valid high and it. But inside, if you check, we also have something that looks like a low, and this low is the one that we're expecting could break at this previous high, but it failed. Let me zoom in. I know some guys won't see. So again, I'll repeat. Let me take out my two. We have a low, a high, a low, a high, a low, a high, and it. But now we have this low, which was supposed to come and break this high, but it failed. Price came to it, and and then it took it. That means we have a change of character. Our breakout structure now is when we come and break this valid low, and then price came, broke that low, meaning that we were in an uptrend. When we got that breakout structure, we are now switching to a downtrend. Low, high, low, high, low, high, low. Are we understanding up? Are we getting it?
Yes. Nzizisa.
Yes, sir.
We are understanding.
H2 ngondile mvunzo kahle.
All right. So if we are all understanding, it's fine. I think our session has got like a minute 30 seconds remaining. So what we need to do is let's do this assignment. We want to do things on what is currently happening, and we don't want to use data rakudara because I believe kuti if we want to take this serious, we need to do it in real time. So let's go and do it on V50S, V25S, then on FX volume 20, and on Boom 1000. I need you to give me that assignment by 6 p.m. before we have another lesson, another class. And I'm also going to be sharing a couple of PDFs in our private room. So please, let's do that. All right. So let's chat in the group
Can you please,
and yeah.
sorry, sir, can you please repeat the pairs?
Pardon?
Kindly repeat the pairs that you're supposed to do as homework.
Okay, I'll post them in our private group. It's okay.
All right, that's fine. Thank you.
Okay.